Hello, welcome to my channel today. This is a King's Tutor. This is the first time of joining us. Thank you for clicking to this, okay? Ensure you like, comment, share, and subscribe. Now, today we want to see solution on single entry and incomplete records, okay? So we want to see the solution. Now, okay? So let's see the question. Now, it says, Andy did not keep proper books of accounts from the information supplied below. You are required to ascertain his net profit or loss. Now we have opening balances January 1st, cash at bank 20,000, loan 5,000, trade debtors 3,000, rent owed 100 naira, rates prepaid 200, general expenses owed 150, building 10,000, and fixtures and fitting 15,000. Now we have balances at the end of the year, December 31st, 2002. Loan 5,000, cash 22,000, trade debtors 6,000, rent owed 200, building 11,000, fixtures and fitting 16,000. During the year, he introduced additional capital 1,200. He withdrew 1,800 for personal use. Okay, so I want to see how to solve this. Now, this is a single entry. Okay, it does not conform to the double entry system, but we are required to generate a net profit or loss from the information given. Okay, we have done a full video on this. Now, if you have not seen that, ensure you check here or you check in my description or in the playlist on single entry. Okay, now let's see how to solve. Now, in this we are to get the closing capital and also the opening capital. Okay, and also get a statement of net profit or loss. Okay, now let's get the opening capital first using the items at the beginning. So if you check there now, you'll see those items at the beginning. Okay, so we're going to use it. So let's have the name of the owner as Andy. Okay, Andy. Now let's get the opening capital. So prepare what they call statement of affairs. The statement of affairs as at 1st January. What's the date? 2002. 1st January 2002. So the statement of affairs is an abridged balance sheet. So the balancing figure here is what will give us the opening capital because it is at the beginning. Okay, so please don't forget that in case of exam condition. So we are going to post all items that belongs to assets here, while also items that are liabilities. Now the balancing figure is what will give us the capital. Okay, so the capital is the essence of preparing this. So now let's post. Now the first item there is cash at bank, but let's arrange in order of permanency. So we can have in the asset side, let's have our building. So we have building 10,000. Okay. Now the next one we have fixtures and fitting. Fixtures and fitting 15,000. Okay. Why the next one we can get our cash at bank now. Cash at bank. How much is it? 20,000. Okay. Why the next one, loan. Let's start from up now. Loan. A loan is a liability, so let it come here. So loan is 5,000. Okay. Why the next one is trade debtor. It's an asset, so it will come here. Trade debtor. So how much is it? It's 3,000. Okay. Why the next one, rent owed. Now rent owed. Now how do you interpret this? I've done a video on adjusting additional information. Please ensure you check that to understand most of these adjustments. Now we have rent owed. Now you are going to interpret it. What is rent? Rent is an expenses. What is owed? Owed is what is owing, either accruals, in arrears, due, outstanding. They mean the same thing. So this is expenses and this is accrued. So it is accrued expenses. Okay, so accrued expense. Now remember, when they are silent, we assume we take the rent as expenses. But there are some questions when they say rent receivable, so it's an income. Okay, it's a entirely different scenario. So they say rent, or that's accrued expenses, and accrued expenses is a liability. So have rent owed. How much is it? Is 100. And the next one, general expenses owed. The same thing. General expenses owed. That's accrued expenses. So I have general expenses owed. How much is it? 150. Okay. Building and fixtures, we have put that. So then rates prepaid, we miss that. Rates prepaid. So I'm gonna put rates prepaid. Now all these items came from the opening balances. Take note, okay? Rates prepaid is 200. Okay, so 200. So now this will give us 5,000 plus 100 plus 150 will give us 5,250. Okay, so if you watch it very well, you'll notice this side will be greater than this. So let's get the total of this. 20 plus 10, 30, plus 15, 45, 48, 200. So we'll have 48, 200. 4800 minus 5,250. Remember, this is supposed to balance. So for it to balance, this becomes a balancing figure. So 48,200 minus 5,250. From my calculator, this becomes 42,950. So that if we balance this is 48,200. So this is our opening capital. Okay, so we are going to use that opening capital. Now the next thing now is to also prepare statement of affairs for the end to get the closing capital. So we are going to say the statement of affairs as at 31st January 2002. So I'm gonna use item at the beginning. Now at this point in time, in some question, if they give an additional information for adjustments, this is you have to do the adjustment. Okay, take note, especially depreciation in some question. So let's get the balance figure. So this will be our assets, and the same thing, just that we're using items at the end. So liability. So the first item there is loan. So loan is a liability. So we have loan. How much is it? Loan is 5,000. The next one is cash. Okay. Next one is cash. But like I said, in order of permanency, we are going to use our building first. Building is 11,000 there. Okay. The next one is fixtures and fitting. Fixtures and fitting. How much is it? 16,000. Okay. Why? The next one is, okay, let's start from top now. We've done loan, then cash. Cash is how much? 22,000. The next one, we have trade debtors. Trade debtors. Trade debtors, how much? 6,000. Then rent owed. Rent owed, we have interpreted that as liability. How much is it? 200. Then we have done building and fixtures. Okay, so now let's now do this. 5,000 plus 2 give us 5,200. Remember, we'll have a capital here to get the closing balance. So 11,000 plus 16,000 plus 22 plus 6,000 will give us 55,000. So it's obviously greater than this. So, and both of them must balance. So for them to balance, 55,000 minus this will give us this. So if we do that, it will give us 49,800. Okay. So now this is our opening capital because it's at the beginning. We use items at the beginning. This is the closing capital. We use item at what? End. Okay. So now let's now prepare the statement of net profit or loss. So if we have the statement of net profit or loss as at 31st December 2002. Okay. So now we have a format for this. I've also given the format in the full video. Please watch that. So we're going to start with our closing capital. So we have closing capital. Closing capital. What's the closing capital? The one at the end, 49,800. Okay. So we'll have 49,800. Now, the next thing to do is add drawings. If there's any drawings, you add it. Now, remember, in some question, they might not have a drawing. Okay, so you just further ahead. So add a drawing. Now, so from the question, in the additional information, they said The drawing is 1/8. He withdrew 1/8 for personal use. So that withdrew for personal use is a drawing. So we're going to add it 1/8. So 49/8 plus 1/8 with my calculator, it will give us 51,600. So we'll now less opening capital. Now opening capital is this one at the beginning. So we'll have 42,950. Now we'll add this opening capital with additional capital, should in case he had additional capital that was plowed into the business. Okay. And in the question they said he introduced additional capital of 1,2. Okay, 1,200. So this plus this will give us 44,150. So 51,600 minus 44,150 will give us 7,450. So this becomes the net profit, because what he's using to close the business, his closing capital, plus what was withdrew from the business, that's the drawings, exceed what was used in starting up the business and the capital that was added. Okay, so we have a net profit. It would have been a loss in some situation. They might have a loss when the opening capital and additional capital is greater than what they are closing with. Okay, so that is the question. Okay, so ensure you like, comment, share, and subscribe to this channel. And let's see the next one. Thank you very much.